welcome back to Yahoo Finance Live. Usually when we bring in Yahoo Finance's Jared Blikre on the show, he's drawn some squiggly lines on a chart showing us some vomiting camels, some death crosses, if you will. But today, keeping in the theme of the big game on Sunday, Jared's actually going to walk us through some statistics about some predictive analytics of the football game to the markets themselves, thanks to S&P Global Market Intelligence. Jared, tell us about some of the odds and some of the numbers that you look at, including the over-under on the total amount of points scored. What does that tell us?
That's right. S&P has really done a number here, no pun intended, just looking into some of the possibilities and really interesting. Let's go to the Wi-Fi Interactive. You can see here, if the final combined score, that's the both scores of the teams combined, if that's greater than 46, the market, that is the S&P 500, tends to be up 16% almost. Now, if it's less than 46, the market's only up about 8.2%. Looks to me that they used a little bit of cherry picking here. I've done some of these optimizations myself, but nevertheless, pretty interesting. And here's another stat. Locals rule, the designated home. When the designated home team wins, guess what? The market's up almost 17%. And when the road team wins, it's up only about 9%. And by the way, the Bengals are the designated home team this year, even though the LA Rams are playing in their home city at SoFi Stadium. So going to be really interesting to see who wins, given the fact that both are basically the home team right here. Now, we also have, going back to Cali, when the Super Bowl is played in California, stocks tend to be up almost 16% in those years. And there have only been 10 states in which the Super Bowl has been hosted, and California trails only Florida in terms of market returns. And I'm going to be writing about this today. You can read it at yahoofinance.com over the weekend, and I'm going to lay out exactly which states produce the best returns. Also want to take a look. Oh, that's another one we haven't gotten to yet. I'll tell you what, I'm going to go back to the beginning. I just want to add a couple more stats here. The market performs better on average after an NFC win, returning an average of 13.8% versus 10.7% after an AFC win. And by the way, both the best annual return, that was 37.6% in 1995, and the worst return, that's negative 37% in 2008. That was a global financial crisis. This occurred after an NFC victory. So I guess you got to pick and choose what you want in this market. You want to be up 37% or down 37%, Brian?
Yeah, Jared, I'll pick it up here. A lot of things to think about. More data to think about ahead of the big game. You can catch, of course, read Jared's article on our site.